Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 11th, and wanted to just take some time and talk about where markets ended up last week and where we see markets moving forward this week. And so after 2 weeks ago, we saw a nice market sell-off where the markets were down around 3%. However, markets really rallied back strong last week and really recovered, with the S&P 500 being up over 4%. Your small and mid cap indexes were up over 5% last week alone. And as we headed into this week, we continued that rally higher as we continued to watch day in and day out markets, S&P making all-time highs, new all-time highs, the Dow making new all-time highs, the NASDAQ making new all-time highs this week. We continue to move higher. Now we've taken a little bit of a pause today. Markets are down just a little bit today, but I've had several people come to me and say, Scott, the market seems very frothy, valuations seem very stretched. Where do you see markets going from here? Are we due for a correction, or can markets continue to move higher, even given the fact that we're still dealing with a pandemic, given the fact that we still have really high unemployment? Well, the answer to that question is yes, markets can move higher. And one thing that investors really need to take into consideration is twofold. There's two things that are really moving markets higher right now. And one of those is the fact that we believe that we are going to be on the other side of this virus this year, and that economic activity is really going to accelerate. And there's a couple of reasons for that. And one reason alone is the savings rate for Americans last year hit an all-time record high last year. And you think to yourself, well, during a pandemic and a global recession, how can savings go to an all-time high? Well, Americans weren't spending money on travel and leisure and going on vacations, and restaurants were closed, bars were closed, so money was being saved, and all of that money is still being saved, and it's going to go somewhere. The other aspect of what's moving markets higher is just the amount of money that is in the system. And the amount of money that's out there is trillions and trillions of dollars that we have come up with, and that we have printed and distributed through stimulus and through central bank activities, that the world is flush with cash. And that cash has to go somewhere to generate a return. Well, when you have fixed income rates as low as they are, money has to flow somewhere, and where that money is flowing is into equity markets, and it's flowing into those markets because it's the only place to generate a real sense of return. So that's really kind of what's pushing these markets higher, and that's why we do believe that we can see some upward momentum from here, and the markets are telling us that. And one key indicator that I found very fascinating is the M2 money supply, which is the amount of money that circulates through the economy, is up 26% year over year, which is an all-time record high. And the average is about 6 to 8% of the money flow being just constantly moving and moving and moving. So this money is circulating and flowing through this economy, even through a pandemic, even through a recession. And that's been the support of the stimulus and the central bank monetary policy that has allowed markets to be where they are. So if you have questions about where markets are going from here, how to actively manage your portfolio, feel free to call us anytime. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. We'll talk to you next week. Thanks.